Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil markets. I'll start with Paris rapeseed. There are two key patterns here. The first and larger one is the February 2021 to July July 2022 ascending broadening wedge pattern. Currently 720 3/4 to 970 1/2. This is not a perfect pattern, but it has been the main market driver higher in the early part of this year. The break lower in July has left the following incredible targets on the downside. The primary target X is in the 352 area, with a harder to get secondary target X1 in the 217 even area. These are obviously, pretty much out there targets. What you can do is you can put them into your diary on the back page and just look at them maybe once a year or when I next mention them. The second smaller pattern is currently in development and seems a more reasonable opportunity. It is created from the break lower of the larger pattern in June and July and is an optimized falling wedge pattern, currently 577 3/4 to 624 1/2. The two key recent features here have been the temporary halt to the decline at the February low at 599 3/4 and the earlier breakdown through the 50% Fibonacci line of the December 2020 to April 2022 move at 644, plus the retesting of this 50% Fibonacci line afterwards as resistance, and the effective way it capped the market, especially at the curtailed attempt last week, suggesting perhaps that this falling wedge is the way to look for the future. The key problem with this pattern is that it is in the wrong place. By that I mean it should be forming after what had an ascending pattern, not in this case a great big gapping drop lower. This leads me to suspect that perhaps this pattern may morph further along its lifetime into something else. However, until that happens, that is what the market looks like right now, and to be honest, there isn't much time left to change that, or change or morph into something else right now. I'll leave you with a final thought. Last week, I suppose, in some ways, surprisingly, was a weekly key reversal down. Just have a think of that and the implications that means. Winnipeg canola. Whilst the September 2021 low at 839.20 and the August 2021 low at 817 even both acted to halt the declines back in late June and early July, it was originally the 50% Fibonacci line of the October 2020 April 22 move at 863.80 that triggered the retro reverse engines on the way down, and as recently as late August were capping the rise. The market over July formed a double bottom but failed to see that pattern exploited, and for that reason I decided to not place any primary or secondary targets on the upside. However, what has become evident since the start of the sideways to slightly lower movement we've seen since June is that there is a bear channel, currently at 281.20 to 889 even. And that's in operation, and it is this that is driving the current market. I say that because 6 weeks ago we had a dead cross of the medium moving average, currently 922 1/2, moving down through the long moving average, currently 990.70, causing a combined indecisive spinning top and outside day on that Friday. Additionally, since the middle of August, we've seen the short medium moving average, currently 834.10, enter the frame of the market, and this in late August and early September, acting as bearish pressure on the market and on any rises seen since. Indeed, it is, I suspect, only because the short medium moving average has started to flatline and go sideways that we have not seen any aggressive moves lower. Thus, we can read into the lack of significant action after the dead cross and the flatlining short medium moving average that the current bearish channel is the main driver lower here of this market. Until that channel breaks or morphs into another pattern, then it will continue to show the slightly bearish angle of attack. one final thing to look out for. The June 2020 to date uptrend, currently at 770.10, is now impinging upon the market, but from below. This week it is crossing the old former March 2008 high for the market at 770 even. This may prompt the next event to watch for here. Bursa Malaysia crude palm oil. I'd like you to take special note of the bearish halfway hesitation back in late June. The leg down that ran into July was coincidental and likely triggered by the first dead cross we'd seen here for quite a while. It was of the short medium moving average, currently 39.33, down through the medium moving average, currently 48.82. The move down was halted, well, I have to assume it was halted, as there was nothing else nearby. It was halted by the extension of the neckline, currently 38.28, of the September 2015 to November 2017 head and shoulders pattern. Since then, prices started a small bull channel higher, verging on being an ascending expanding wedge pattern, and that's currently 42.39 to 51.14. Now, three things to remember here. Firstly, that dead cross I mentioned earlier, well, 5 weeks ago we had another dead cross as well, one I would normally regard as more significant. It was a medium moving average, currently 48.82, moving down through the declining long moving average, currently 53.73. You may ask now, did that dead cross provoke a similar bearish type action? Well, no, not really. Interestingly, the short moving average, currently at 37.94, provided a sort of dynamic uptrend support that turned bearish only 3 weeks ago. More on that one shortly. Therefore, one can regard the bearish influence abated and not as strong as in late June. Secondly, the short medium moving average, currently at 39.33, was and is thundering lower. Its pervasive bearish influence was seen as early as late August, when it capped the market and acted as a proxy for a significant downtrend. It has tempered its fall in recent days, but I believe it was this very moving average that triggered the move lower down through the lower bull channel line at the start of September. This leads to my third and final point. Do we regard this bull channel as part of a larger pattern? And that's a question. Is it part of a larger May to date bearish halfway hesitation pattern, which was my original idea? Or do we regard the action since July to date as part of a possible double bottom pattern? The jury is still out on these two ideas, though I have to say the idea of a bearish halfway hesitation is looking less trustworthy given last week and this week's actions. We shall see. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.